Welcome everyone to attending my real estate network live webinar. We could keep this webinar maybe about 45 minutes, give or take, because I respect Richard Advani's precious time. He's doing tons of loans right now, more so than ever before. We want to disclose the reason why, which is very exciting for all of us. By being part of our network, a universal network, you're getting a lot of value add, and I appreciate if some of you can share that with me, how the network benefit you guys, because your network is your net worth. We have to make your real estate goal much more efficient. Otherwise, you can go out there on your own, find out a stake, all the risk involved if you want to do it yourself without the power of the network, with the trusted turnkey providers. Your real estate goal would be really impacted in very, very bad way if you try to do it yourself. That's why our network is important. We have a lot of updates for you. Most of it you have not heard because the general media, the YouTube videos and those mainstream medias, they always talk about clickbait, negative headlines, the world coming to an end. Furthermore, a lot of news information you hear out in the mainstream media, they are primarily focused on primary homeowners, whereas real estate investors, the way we do things are completely different than the mainstream narrative. Richard and I are continuing to be frustrated by all this negative programming and misleading and inaccurate information they are putting out there to the news media and YouTube videos, clickbait, all those kind of things. We focus your energy on people within my network. We are very transparent. We're very realistic in the way we educate you guys, and hopefully you guys appreciate that. So Richard, I know a lot of things happening. Anything you like to go over from high level briefly, and then throughout the next 40 minutes, we can entertain some audience questions.
Nice to chat with everyone here. I'm Richard Advani, mortgage lender. I work with Guaranteed Rate. I've been a real estate investor for 15 years myself, been doing investment loans for the bulk of those 15 years. I had one of the top investor-friendly lending teams across the country anywhere. I've closed 5, 6, 7,000 investment loans in my career. Been working with Seewing for quite a while. There's a lot happening right now in the real estate market, in the lending market, which we'll give you a little teaser of today. And I'm curious to obviously hear your guys' input on what we're going to share. And then I know Seewing and I are going to have another webinar next week where we give you guys some more details, but be prepared for whoever's on this call, because you're going to get the scoop before anyone else on something that will completely change current market of real estate investing for all of us. Like, it's big, and I'll tell you about it. But I do want to firstly, like a movie, we'll dangle it and then jump into some other things and circle back to it. One thing I do want to touch on is, as Seewing was saying, this whole negative doom and gloom sentiment, the last year and a half, real estate's going to crash and there's no buyers and all this nonsense. The reason why it's interesting is if you look at the last 30 to 60 days, the doom and gloom's all gone. All the news media outlets now, you see our housing shortage. When is it going to be solved? House prices go up despite yada, yada, yada. And essentially everything Seewing and I've been saying the last year and a half, being on the front lines. If you read behind the lines on the articles that kind of consume the market, right? Home sales down and is a title. And then you go actually read the body of that article, which most people don't do these days, right? We just read the headline, but you read the body, and the body's the percentage of home sales is down at projected for July of this year, but home prices are actually up 0.8% since last year, right? But the headline is home prices decline, second month in a row, home sales decline. And so what we've all actually experienced on the ground line is there's a huge demand for investment homes for tenants, right? All these people, these primary home buyers that are like, oh, we're not going to buy, and buyer sentiment's great. Guess what? Those guys have to live somewhere, all of them. And if they want to be stuck in paralysis because of where rates are, because of the new reality of where things are, it's more of an opportunity for us. Now, what's happened concurrently in the last year and a half, as we all know, look at any of the articles, interest rates have gone up, as we all know, but rents have gone up dramatically, right? Why? Housing demand, right? And if you read the articles now, they're sharing the sentiment Seewing and I have had the last year and a half while everyone else was doom and gloom, that look, the basis for real estate being where it is today, but also being that sure bet, as long as humankind has existed, is its supply and demand, right? There's a finite number. Firstly, there's a finite number of land out there, right? People are living longer, population is growing. But the bigger problem is there's a huge shortage of new homes, and home builders aren't building quick enough. Last year, Google it, whitehouse.gov, Fannie Mae, and you can read the same information I'm citing here. But last year, like 3.5 million homes nationally. home shortage. This year, 5 million homes. No matter what external factor there is, like the Fed's increasing rates to combat inflation and cool housing, as they've said, it's backfired because firstly, the basis of economics is supply and demand. That has not been fixed, right? The other problem that's happened is all these people at 3% rates aren't selling their homes, right? The home prices are still staying high because there's not any inventory in the market because all of us, you guys included, I got a 2.5% 30-year fixed on my dream home. I'm never going to sell it, even if there was another opportunity, because I'm not going to pay 7%. So anyways, backfire on them. I think people are now starting to wake up and see the reality of, hey, real estate hasn't gone down really in most markets in most of the country in the last year and a half to 2 years. It's actually gone up. Rents have gone up. What we have seen is the purchase price to rent ratio anywhere in the country is the highest it's ever been, right? But where's the cash flow, right? Cash flow is not there because of the rates, and the Feds have pushed the rates up, and we know that the rates are eating into the cash flow. And it's funny because sometimes 6 months ago, Seewing and I were just looking at pro formas, and we're like, man, at this purchase price to rent ratio, and this was new construction homes in Texas that normally you would never buy because you're like, hey, there's not enough cash flow. But normally on a $500,000 house in Texas, you get $2,000 a month rent, right? Now on a $500,000 house in Texas, you get $3,200 a month in rent. So it's different, right? So we're looking at the numbers and we're like, man, this property had the rates that we had even 2 years ago. People would be scooping this up. The ROI would be great. And it's that market normally that would be untouchable in terms of cash flow. The missing piece right now has been interest rates. And a 2% reduction in rate from where the current rates are, taking from 7 to the 5s, for example, on a $300,000 loan is $320 to $350 a month, the difference in payment. I'm sure everyone who analyze investments and pro formas, most of what we're seeing out there is going to be, maybe you're making $200 a month on a $200,000, $300,000 property, or otherwise they're low. What happened if you get access to an interest rate in the high 4s or low 4s? National average as of yesterday, 7.1 for a primary. Do you know what that does to that pro forma? Imagine right now you're analyzing a pro forma $250 cash flow. And I said, hey, we could drop that payment to even extra $300 cash flow extra by lowering the payment, right? So now all of a sudden this property is $500 cash flow for investments we're analyzing in more growth markets like the Floridas and the Texases. Typically, some of those performers where I look at on a $300,000 single family home, you're like, I'm making $120 a month. That's not worth it. Guess what? If rates, instead of being at 6.8 to 7.25, we're at 4.8 to 5.25, all of a sudden that property would have $350 cash flow versus $80 cash flow. And all of a sudden now it will pencil out ROI. Now, why am I going into all of that? Because we actually have a program now, a conventional 30-year fixed Fannie Mae program where investors can get rates up to 2% below even where primary home buyer rates. And it does involve myself working with the builder and developers, and the builder and developers essentially incentivize a chunk of money for their buyers by buying down the rate essentially on this chunk or this block of money. And then in turn, you as a buyer come in and you have access, if you buy from this particular builder or turnkey provider, that you have access to these rates, let's say in high 4s and low 5s for rental properties. And as we discussed, the returns, as you can imagine, guys, this is very new and we've already had a lot of calls with builders and developers. As you can imagine, this is very exciting to builders and developers, everyone in this industry, because once again, one of our builders selling quads, it tripled his cash flow, dropping rates by 2+%. It's a huge program. We're going to give you guys more details next week as more of the markets roll it out. But my advice to you is when you see Seewing have come out and we actually go over some specifics and he confirms which of his teams are offering it on board with this incentivization for you as the buyers, don't snooze, because once again, you see an email come across, hey, we can do 4.99% or 5.2%, 30-year fix for investors. What are you going to do? Pick up the phone and be like, firstly, is this a scam? How? But secondly, if it's real, this pro forma looks amazing. I want to buy it. Everyone's doing that. And every builder that has come out with this, which is very few so far, their response has been ridiculous. Their phones have been blowing up off the hook. As investors, this is fantastic for us because the only objection anyone has right now to buying the properties is well, interest rates are high. I want to wait for rates to come down and draw enough cash flow. Guess what? What if I told you a week from now, 2 weeks from now, we can completely absolve that objection? It's not going to cost you anything extra. The builders incentivize this. They may not pay for your property management anymore. They may not give you a 2% credit towards your closing costs, right? Instead, they're going to apply that money and more to buying down the rate for the buyers. So that way they move more property and move more inventory. Once again, this is almost more of a niche program. I think we're the only ones at Guaranteed Rate really that can offer it. By the way, Guaranteed Rate, a company I work with is the second largest in the country. Know that not only is one of the top 0.1% in my profession, but as someone representing the second largest lender in the country, this program is legitimate. It is Fannie Mae financing, they're conventional loans, but it's going to change everything very quickly. So without going into too many specifics, I'm sure whoever is on the call is definitely going to maybe have some questions. But I guess that question, and you can start first, Seewing, is what if I told you in 2 weeks we can get you rates, and it's market dependent, right? Rates are changing every day. As of 3 days ago, we were able potentially to have high fours to an investor on a 30-year fix. What would stop you from going to go buy a property today if you can get that?
Here's my takeaway, Richard. When you shared this information to me a while back, I've been running my network for almost 20 years now. And this is really a game changer. We're not overhyping anything. This is a real, authentic information. This is a game changer. What does it mean? This means that any investors out there can get mortgage rate around 5%. That is shocking. Your cash flow will increase significantly. Now, with that said, my phone could get bombarded with a lot of inquiries from my members. I get that. So I ask you after this video, plus please put your information in front of me, text me, whatever, about your interest, assuming you qualify, you're ready to go, because this interest rate program is not going to be around forever. This is a short-lived program. There is an expiration date on it. So, and other investors throughout the country, they are also targeting this mortgage product. This is a game changer. So there's still a very limited amount of homes available for investors for this mortgage product. First come, first serve. If you procrastinate, if you have analysis paralysis, guess what? You are going to miss the boat. And 5 to 10 years from now, you're going to say, I could have, should have, would have. Yeah, this is truly amazing. It's going to change the narrative. It's going to change the dynamic.
Bottom line, this time if you snooze, there's going to be no inventory, right? Everyone's going to jump on this. It's going to move very quickly, especially if right now rates have gone up a lot in the last 30 days. And when the builders secure these funds, they secure it for a chunk of time. If rates continue to go up, this program's going to obviously be more and more attractive, but there's not tons of inventory out there. Once this kind of takes wind, which I'm making sure it's taking effect very quickly because I'm on the phone with 10 builders every single day. 3 weeks from now, you're going to see this being offered all over the place. And by that point, by the time you see it all over the place, it's going to be too late just because you're going to have to wait in a long line of people trying to buy those properties.
So Richard, do you recommend my members to contact you directly once we get the word out so you can do their loan pre-qualification for this?
Yeah, absolutely. Because we get them pre-approved. And then, of course, we are showing that builder, hey, I'm ready to go. I want access to that rate and that block of money to get me in contract on the property.
If I understand you correctly, this mortgage product are only available mostly for people like us. I mean, my network. This kind of mortgage product are not being put out to the general public. It's only investor specific. It's only specific risk investment clubs such as my network are purview to this kind of like unique niche.
It is available to primary home buyers as well, but it is very niche, as you said. For example, you can't call Guaranteed Rate. No one you talk to at Guaranteed Rate have even heard of this program yet. We are one of two that actually have approval and authority to offer this program because it is a very niche program. There's a lot of technicalities, obviously, that we need to go through with the builder to make sure everything works. But yeah, it is a very niche program. It's a very targeted program. And the only way to take advantage of it is the lender, me, has to work with the builder make them a premier builder with Guaranteed Rate, and then obviously get them set up to secure these incentivized blocks of money. But yeah, for you as the buyer, you're coming in, all that's already been done, right? So you're going to come in, it's conventional 30-year fix, Fannie Mae, no different from anything else, no prepayment penalty, nothing tricky. It's just, you're going to come in with an incentivized interest rate that was incentivized by the builder. Everything else is noise to you as the investor. The technicalities and all that, obviously we go through with the builder, But bottom line, you as a buyer, you're going to have access to these ridiculously low rates that the builders paid for to incentivize, assuming obviously you work with that builder and buy one of their properties. You come in, normal pre-approval, normal loan, nothing tricky, special there, no catches, gimmicks, nothing.
Richard, am I to assume that this mortgage product will not last forever? Do you have any clue as to how long this program?
I think it's going to be around forever. This program has been around 10 or 15 years. However, it was completely revamped earlier this year, which is why now it's actually being taken advantage of. Prior to this year, Fannie Mae had this program. However, it wasn't structured well and attractively for the builders. The builders had to pay carry costs on the loans until things close and pay interest and all of this stuff. So it was never utilized, and then completely revamped it to where now it actually does make sense for the builder. It makes sense for the consumer. So this revamped product, I anticipate it's always going to be here, right? And that's the cool thing. Rates go to 8%, this program will be about 2% lower. If rates go down to 5%, guess what? This program will probably be able to let us get down to the threes. I don't see the program going away, especially you got me at the helm trying to make sure everyone knows about this program in the market. I don't anticipate it going away anytime soon. It's a revision to an existing program that wasn't used a lot, but has been around for a while.
Wow. So given today's high mortgage rate of around 7%, this product for investors, we can get it for around 4.99%. However, if the mainstream mortgage rate comes down to 6% later this year or next year, then this particular product will go down even more than 4.99%, 4% for investors.
It's cheat mode. Essentially, it's up to me to get the builder on board and get them agree to spend all this money to incentivize the rate based on the fact that it's going to completely change your business, right? They're going to sell everything they have. They're going to sell it quick. They'll be able to take away other incentives. It's a huge product and it's gaining, as you can imagine, tons of traction. And that's good for us, obviously, as investors. What eventually is going to happen, though, is this program's going to increase demand, and increased demand is going to increase prices. And when that's going to make up for some of this. So don't sleep on this, because before that natural effect has happened, where the demand's going to increase for a lot of these properties, it's going to be because of the rates, and that's going to drive prices. And that takes a little while to happen. If you jump quick, you'll be able to take advantage of the low, attractive, incentivized market prices on properties combined with these low rates. It's a win-win situation.
Wow, that's amazing. This is truly a game changer. It's an amazing time. We can open up for questions. While we're waiting for questions, Richard, we don't know the exact markets where those builders or have this product available and the houses, but I'm hoping it'll be in Florida and Texas. As you and I know, these two markets has been robust at this moment. Of course, we encourage investors to buy when the prices are right, around the mid 200s. That's the ideal new construction homes, like we have been promoting. Instead of getting a 7.3% mortgage rate for investors, you can get 4.99%. Like Richard said, your monthly cash flow will increase several $100s more that will make your cap rate, make your cash on cash returns, and make your rent to value ratio a lot higher than what we have been seeing. This is absolutely a game changer. Okay, there's a question right here. What are the ideal debt to income ratios you use?
For conventional loans, you can go all the way up to 50%. Ideal is anything under that. It doesn't make a big difference whether you're at 49 or 28, but we can go up to 49.99% typically. And then we also have the ability to use projected rental income on the property you're buying, even if it's not rented out, which of course will help keep that debt to income ratio nice and low.
Richard, when somebody trying to buy a property and they go through a DTI, debt to income ratio situation, when somebody have existing rental properties, if those rentals are not long-term rental rates, what if those rentals were short-term rental rates or mid-term rental income? How does a lender calculate in terms of season?
There needs to be at least 1 year history of the income reported on the tax returns to be able to effectively use income on a short or medium-term rental.
And the lender used the 75% rate multiples, right?
Correct.
So what about long-term rental historical documentation?
Nothing. Just a signed lease agreement and security deposit if it is rented out. If it's not, at the time of appraisal, the appraiser will also do a rent survey, and then we can take 75% of that number.
So the midterm rental and the short-term rental rates are clearly based on someone have a Schedule E income schedule to reflect the rental income, or that's why you need at least a year of rental seasoning to calculate the debt to income ratio. The question was asked, what are the typical down payment? Regular investment loan down payment. 20 for single family home rentals, or if you are duplex or higher, is 25% down minimum for investment loan. And this mortgage product is no different. Am I right, Richard?
Correct. 20% down is available on single family homes, but pretty much everyone's putting at least 25 based on the current market. What we were talking about in terms of rates was assuming 25% down.
With this 4.99% mortgage product, one can go back to 20% down on a single family home purchase rental.
Yeah, it still makes sense.
I know the builders try to ramp up their homes for sale, not only for investors, but for primary home buyers, but they're not doing enough of a job to alleviate the regular resale homes are not available for sales. That's a very big challenge. In my mind, we can see a seller's market for years to come. We are becoming a renter's nation. I believe this is a historic renter's nation. This means that any white investors to buy investment property in good entry-level markets like the markets that we are presenting, you're going to have very good rental situation. You can see bidding wars by renters. You can see upward pressure on rents because most people can't afford to buy a home. We have a 40-year low affordability of home purchase, like we mentioned. More and more people have to get into the rental pool. That's really good for real estate investors. The risk is extremely low to be a real estate investor these days. As long as you buy in the right market, you buy the right type of prices, in the South and Southeast, some in the Midwest, but do not even try to buy any kind of homes in the Western region of the U.S. because those home prices are still very high relative to the rental value ratios. Very low cap rate and cash on cash returns are extremely low in the Western region of the U.S. So I would not go to that region to buy rental properties. I'm sure Richard will agree. South and Southeast region, Florida and Texas especially, is an ideal market to work with the builders to use this mortgage product to continue to acquire your rental properties. Richard, what real estate investors need to look for down the road?
I'll just leave everyone with the saying, be fearful when everyone else is greedy and be greedy when everyone else is fearful. And the last couple of years has been fear-filled, headline-induced market that, or rather the sentiment has been driven by that. And people who have continued to buy have fared very well. For example, COVID, right? Everyone's, the market's going to crash and rentals and everything went up 35% in 1 year. Where are those doom and gloomers now? You guys really wrong. And whoever got caught up in that hysteria lost a lot of money. And I think the biggest thing is get away from looking at real estate short-term. Look at real estate long-term, 10 plus years, right? So people are like, what happens if I buy it today and rent properties value drop 10% next year? Who cares? You're buying it for 10 years. I don't care what's going to happen in the next year, 2 years, or 3 years, or 5 years. The question I ask myself is 10 years from now, at least, and whether it's 11 or 14, whatever, but 10 years from now on average, is real estate going to be a good investment? Is it going to grow? Is it going to appreciate? Is it going to be a good, safe place for my money? And the answer is, if you're looking 10 years of time, it's always going to be yes. It's statistics and history firstly dictates that, but also just based on inflation. No matter what rate you lock, 4% or even 7.5%, 30-year fixed, inflation's 10, 15, 18. When was the last time you've been anywhere shopping? Go to Walmart, go to the grocery store. We all know inflation really is. Everything's 2 to 3 times more expensive. 30% inflation for 3 years will do that. Obviously, we all know the statistics out there are unreal, but guess what? 10 years from now, just based on inflation, your rents have gone up dramatically. Everything else has gone up, but your mortgage payment, even at 7.5%, hasn't changed. And that's the wealth builder. It's mainly new investors who look at real estate short term. They're, the next 2 years, my cash flow. Let's say you got 12% return on a $200,000 property. You put $50,000 down. Let's say you got to a position where you remain 12%. You know how much that is? It's $250 a month. What is that going to do for you? Is that going to make you rich, or is that going to pay for one dinner out or a quarter of the groceries that you buy in one setting, right? That's not what's making you wealthy. And that's not why you're buying real estate. You're buying real estate for the long-term wealth building effect. Remember that when you're making investments, right? I'm not saying be blind to numbers. Make a good investment in a good property that's going to fare well in the long term, because that's where your strategy should be. Look, I get if you're older, if you're about to retire, your strategy is going to be a little different. But for most of us, you should be looking at these at least 10-year investments. And if you're not, why aren't you? Is there a reason why you're not, other than just what you heard you should do? So I think be real with what the investment's going to give you, look long-term, and I think you'll find that you can't really go wrong if you're looking long-term and you're making the right investment.
Richard, here's my thoughts. 10 years ago, with my network members, I remember way too many real-life examples. 10 years ago, as I consult with my members, with my investors, for whatever reason, some took action and many who did not 10 years ago. Now we fast forward to today, when I speak with those people, what are your thoughts? Then they say, oh, I wish I could have, should have, would have. The past 10 years, in some of those properties they didn't buy have double and triple the value. And the rental income has increased dramatically. Now we fast forward to today, you have to understand the consequences of inaction. Because if you do not take action today, 10 years from now, we're going to have the same conversation. I'm going to ask you, what did you lose out? You lose up on double the appreciation, the value of the property you did not buy, and quadruple the rent that you could not collect. At the end of the day, it's all about time. We have a finite life expiration date. Each day you do not take action, you are hurting yourself financially because your time is precious. Put your money to work now, and then you're making your money work harder over time. So I see consequences. I see people regret so often about our members. I know human behavior, sometimes we cannot overcome. Here's the problem, right? People are human beings. It's just they are very emotionally distracted. They are unable to focus. They are too fearful. Each one of you get to look at yourself in the mirror. Do you have the mindset to take action, or can you get out of your comfort zone and take action? If you can't look at yourself in the mirror, what kind of a belief system have you had up until now? You have to reprogram your belief system, reprogram your money blueprint, program your mindset, so you can, investment of your mind, of your personality is more critical than anything else. So you have to work on yourself. You have to invest in yourself first and foremost before you crunch the numbers. And it's easy for me and Richard to give you analysis and pro forma, all these nice numbers and everything else. At the end of the day, if you're unable to reset your money thermostat, if you're unable to reprogram yourself, if you're unable to change your money blueprint mindset, you will never become financially free. You will slave away, go into the rat race, and at the end of your retirement, you got nothing to show for after working for 40 years and 40 hours per week. Look at the Richard. Richard have almost 20 investment properties, and the time that you spend with on your portfolio on a monthly basis is like what, 1 hour? Richard, am I right? You spend 1 hour to manage your portfolio every single month on your 20 property portfolio. Am I right or wrong?
No, actually, it was 1 hour a week because remember, I've got 2 short-term rentals that at any given weekend, I am hosting about 40 people. Yeah, 1 hour a week, including the short-term rentals, which is 99% of the time.
All right. I think we can, very good, Richard. We recorded at least one video on Richard's unique journey. If Richard can do it, and my other members, before you can do it, you can do it. You can scale your portfolio. You can buy more than one property. And right now, in times of crisis, there are opportunities. So you either ignore all the chatter in the mainstream media, focus on your unique financial goals, focus, dedicate, commit to your goals, and take action over time. And you should be fine at the end of your financial journey rainbow. So that is my takeaway. That is my recap. Richard, would you go ahead and do a recap? And then we'll come back. When we come back in the next week or so, we're going to do another video. We'll give you a more deeper dive into this unique game changer mortgage product. Richard will come back.
Yeah, I don't have anything to add. I did my parting right before you did, if you recall. But yeah, definitely just get off the fence. If you have any questions, feel free to reach out, obviously, to either of us, and stay tuned for more information on which markets are taking advantage of this program. That way you as investors can go start buying with these low rates.
Absolutely. That's all we have to say. Thank you for attending on this live Zoom webinar. This is Seewing Yin, and Richard Advani is the guest host. Thank you so much. Have a nice day. Good luck. See you on the other side. Bye-bye.